A positive week caps off a wild 2 weeks in markets. Let's talk about it on the Weekend Review. Okay, friends, let's talk about the market. Here's what you need to know. First up, here's the market the way we've always been looking at it. Red line here is the S&P 500, orange is the 50-day moving average, purple is the 200-day moving average, and we look really great on our 50-day moving average test. It's been about 3 times now where I have talked about a test of a moving average. And when I talked about it, I said, hey, everything's going to be okay. Don't worry about it. We should bounce. And at the time of me making that prediction, the market looked like it was, sort of falling off a cliff, almost into like stepping into a empty elevator shaft. It was this 50-day test here earlier in the year, the current one that we're in now, and then the 200-day test late last year. And so I'm very pleased to report that we are once again above our 50-day moving average. Things look really good in terms of this specific test. And even though we're not out of the woods yet, I want to see a break above our all-time highs before we get the all clear. Things look really great, and we're moving in a really good direction here. Now, this is interesting because I have talked to a lot of strategists and a lot of other advisory teams, not us, and it seemed like the whole world kind of came around last Monday or Tuesday near the low to raising significant amounts of cash. And we certainly did not do that. And one of the reasons why we didn't do that is things look like a pretty normal 50-day moving average test to me with a little bit of a kicker of a yen carry trade unwind over top of it. And so that's what told me, hey, don't raise any cash, just keep everything the way it is. If you've got anybody who's investing in the market, maybe accelerate them into the market a little bit. And at least as of today, right now, that looks to be the correct read. But why I talk about this, I don't normally like to talk about other people and what they do, but why I'm talking about this is that's what's going to be the fuel for the market from here. So all that cash that was raised at a lower level, it's a week and a half from that span in time, and things have already gotten extremely painful. So if you raised cash at the bottom, now you're saying, uh-oh, what do I do, right? You're looking around, you've got cash where rates are going to start coming down in September. You've got bonds, which, rates have already been suppressed in the bond space. So the only place really for the funds to flow is once again back into the market. And so what I would expect from here, not violent like this of the last week and a half, that was just sort of correcting the excesses of the yen carry unwind. But what I would expect is a continued stair step higher as some of those people who got blown out previously, come back into the market. Very normal. We see this very often, particularly around tests of the 50-day and the 200-day moving averages. If you don't give the moving average enough time to breathe, you're going to sort of jump at your own shadow, and then unfortunately you're going to get whipsawed and have to get back in. So that's what I would expect, and that's sort of, I think, is going to be the regime in the market, at least until we get into maybe some election jitters. So things look good on a pretty extended basis here. And one of the reasons why I think, what really helped during this process was we sort of had a threefold development. This was sort of our mind frame about what was moving markets. And as of right now, all these things seem to be resolving. So previously I said what was moving the markets at the lows of the 50-day test, we had economic weakness, it was the response from Iran, and then the Japanese unwind. And as of last week, I said the Japanese unwind was pretty much over, and I think that is sort of a definitive statement right now. On the Iranian response last week, I said, well, if you look at geopolitical analysts, and this could change day by day, and I could be completely wrong in this, but at least right now, some of the chatter that we're seeing is Iran doesn't want to start a larger regional war, and because of that, I think the response is going to be pretty muted compared to what we were afraid of a week and a half ago. And so this is sort of removing some of that pressure on the market. And then finally, economic weakness. Now, as you know, I can very much see that the economy is weakening, and certainly the Federal Reserve, heads are talking about this very often right now. So this is true. The economy is weakening. However, we are so close to earnings season just recently, getting done. We know how the economy is doing. We know how stocks are doing, and they shouldn't be weakening at this point. If the economic weakness is going to start to impact corporate bottom lines, that's going to be at some point into the future, maybe 1 quarter into the future, maybe 3 quarters into the future, but it's not today right now. And so if you look at these 3 things that were causing pressure on the market at the lows, all 3 of them have somewhat resolved to the positive, and I don't think it's surprising then that the market is going to resolve to the positive as well. So things are good. We survived another test of the 50-day. That one was a painful one. My phone was ringing off the hook, but I appreciate you as always for tuning in and sticking with us. We'll see you next week for the weekly update. Take care. Okay, friends, that was the video. Hope you liked it. If you found it informative, good, entertaining, I'd love if you could scroll down here beneath the video and give me a like there. It helps us out with the algorithm. And then if you want to be notified first of anything new that we upload to the channel, if you come over here, click subscribe, you'll be the first to know as soon as we upload anything. Appreciate it. See you soon.